Welcome back to the UK Property Market Stat Show with today's special guest, Iain White, a person who I will introduce to you in a second. The UK Property Market Stat Show is a stat show especially for estate and letting agents and anyone who is particularly interested in the UK property market. Like we always say each week, the most stats that come out are at the bottom end of the funnel. The Land Registry are dealing with sales that were agreed 9 months ago and completed 3 or 4 months ago. So the stats that they're publishing are by very nature 6-9 months out of date. The Halifax and Nationwide data is also 3 or 4 months out of date because they're basically based on mortgage offers, not completions. We're actually looking at the top end of the funnel. By looking at this, we can judge exactly what's happening in the property market, see what's happening, and therefore find out where the property market is going. Thanks for joining me today, Iain. I think this is your third or fourth expedition on the UK Property Stat Show. Thanks for joining me today.
My pleasure, and I'm honoured to be asked back.
Well, you're extremely good value for money for the boys and girls out there in estate and letting agency land. So today we are looking at week 20 of 2023. Just so you're aware, week 20 for 2023 started on Monday, the 15th of May and finished on Sunday, the 21st of May. And we will be comparing week 20 in 23 compared to all the other years going back to 2017. And we'll be also doing years to date stuff. As well. So Iain, let's dive straight in because no one wants to be looking at our ugly mugs, and let's go straight into the top, which is looking at listings. So what I'd like to do is you just basically cut across me whenever you want something to say. So listings this week, hold on a second, are at 37,327, which is actually the best week for listings all year. Thoughts on that?
Well, I think the obvious thing is if people want to sell, then it means people are going to be buying. The majority of people listing will be going on to sell a property. Yes, there are some landlords coming into the space looking to dispose of assets. But generally speaking, it means it's healthy because for me, the UK market or any property market for that matter, starts, lives, dies, thrives by the number of willing sellers in the marketplace at any given time. And if people want to sell, and they price appropriately and they're marketed appropriately, they speak to their estate agent and take the right advice, there are now 37,327 new commission opportunities for the estate agency industry to avail of itself of.
This is the best week for listings since the 26th of April 2021. There you go. Now, the average asking price of a property that has come onto the market this week has been £445,000. This figure has been running at on average for, let me just have a quick look. The average for the year is 429,000. Thoughts on this? Because again, we've talked about this a number of times in the show that the average price of a property actually selling is on average about 25% lower. Thoughts on that?
I think it's just indicative that a lot of people with bigger properties that have perhaps been hanging on for whatever reason, now you've got the cost of living and other factors, maybe interest on their mortgage as their fixed rates come to an end, if they've got a mortgage indeed. It just means that people that are sat in larger properties, the reasons for selling and the desire for selling is growing, and therefore you're seeing a larger number of those properties coming onto the marketplace. Of course, we've now got to get those prices correct in order to attract the buyers to buy, but they are in essence the cream of the crop properties. They're the magnet properties that everybody's been after. They're the ones that have been missing in those years of absolute famine on the listing side of things. It was these very people that weren't listing. They're the ones that everybody wants.
Yeah, I mean, to give you an idea, the average difference between the average listing price and sale price long term over the last 7 years has been hovering around the 16 or 17% mark. What that means is, we said that a few weeks ago, is that the higher price properties have a lower propensity to sell, i.e. the lower price properties probably 8 out of 10 will sell, and the higher price properties probably only 5 out of 10 will sell. But I think it's an important consideration that you have to go fishing where the sales are. and it's that balancing act, isn't it, Ian, between you can put the posher houses on with the higher fees, but you have a lower chance of selling the house. So again, that's a great, if someone ever says, why do estate agents charge on price? Well, the higher price properties have a lower chance of selling. So there's a great retort in case anyone ever says anything.
Well, I think let's just challenge that for a second, because I don't quite know how the data sets are put together, but I don't subscribe to the fact that it's harder to sell a bigger property. I think it's harder to get the price right, and therefore I think it might be harder from that perspective. But these properties are prime UK properties. They've been missing from the market for between 3 and 5 years, generally speaking. They're highly desirable. They just need to get the pricing point correct. But I also think there's a lag between the listing stats, properties coming to the market, and the sales stats, because the sales stats are worked off Land Registry. The listing stats.
These are listing prices versus sale agreed prices, not completed prices.
But how do you know the sale agreed prices based on Rightmove?
Well, okay, so we're basing it on the asking price of a sale agreed. Then you're going to say, well, how do you know that? Well, there's some data from Hamptons who've looked back since 2000 and done this every single year since 2008, and they've actually matched that. It doesn't matter whether the market's going overcooking like it was a couple of years ago or below. The average asking price versus average achieved price is never more or less than 2%. Never changes.
Yeah, I think there is no doubt.
It went over in the last couple of years, but generally before lockdown 1, the numbers have been really tight. They matched they matched listings versus actual sale price, and the gap is from 2008 all the way through 2019. It remains within a 1 to 2% band. So it just shows, boys and girls, that you have to get your price. If you want to sell a house, I know this is obvious, but you have to actually, if you price it right, you'll sell it, which I know is obvious, isn't it? I mean, that's page 1 stuff.
Yeah, and I think that's the story of the market here, that very desirable saleable stock is coming to the market, but maybe inexperienced or overexcited estate agents are using price as a vehicle to get that instruction, when what they should be using is good advice, or if they do get the price wrong, having the gumption and the ability to then work with their clients to try different strategies.
100% agree with you.
These properties will sell and they'll give us fatter commissions, but they also draw the other houses to the market.
Yes, I also agree with you on that one. Yeah, ratting properties, rat them out. Right, let's move on. Year to date listings.
Sorry, just one other thing on that is that if you are a proactive agent and these slightly bigger properties are sticking on the market, there's your next instruction. Go after it. Go and present to the owner and go and make connections with the owner and let them know that you're there and that you'd like to see if you could take up the challenge. Go and be proactive about. These people didn't put them on the market because they don't want to sell. They put them on the market because they do want to sell. Go and find the ones that perhaps believe they've been misadvised and are waiting to be guided correctly, and offer them your services, because sometimes it's the second agent that will pick up the commission, not the first. Well, not sometimes, quite often in the higher end.
Quite often. I mean, according to Rightmove, they stated that this is before the pandemic, 6 out of 10 houses sold with the second agent.
The majority, yeah. I don't know what regional differences exist on that, but I would be encouraged by the fact that bigger properties are coming to the market, because I can solve the problem of them not selling. If they're not coming to the market, I've got a problem. That's a much more difficult problem to solve.
Can I give you I teach and guide estate and letting agents on how to get more listings. Can I just share with you very quickly, in quick 30 seconds, a quick way to capture those things which are a bit left field? Can I?
Yeah.
Well, most agents normally send letters. Why don't you actually, this is what I teach agents, is why don't you do a promotional video for that property, giving it to the vendor on a USB stick and also on YouTube unlisted, with the purpose of giving that video to their existing estate agent to help them sell it. The other agent won't use it because it's the competitor agent. How will that make the homeowner feel a bit pissed off? So by doing that, you actually got a greater chance, and that's a fantastic way to get more listings. I know it's a bit weird. You're trying to help another agent sell a house, but by doing it, you actually help yourself. It's a bit strange. I'm a bit strange on these things.
I think the word strange. I think unique always works because it's an approach they haven't had before. It can stop people dead in their tracks, can't it? So if you hit somebody with a tired old approach that they're getting from 20 other estate agents, then expect a tired old response. But if you've got something a bit more innovative, a bit more creative, as you just suggested, and there are lots of other ways to do it, yeah, I think owners are much more likely to respond to a genuine message that's creative and innovative, that they can see is a different mythology or a different way of doing business or a different strategy to get their houses sold.
Good stuff. Right, let's crack on. Cumulative listings year to date, and you can quite clearly see that 2020 was the stick out thumb, because basically nothing came on the market for a period of 8 weeks. The market was in stasis. I think this particular graph here tells us an awful lot, and that is the number of listings. So the pink line is 2013, orange dots 19, blue dots 18, and yellow dots 17. I find it fascinating for the first, get January out of the way, and then it's almost steady. Then every year it is a roller coaster of.
Yeah, I think the market is just showing classic transitional signs of moving from what was a low supply, high demand market to a high supply, medium demand market. I don't think the demand is low. I think the demand is medium, normal.
Yes.
And the bit that's lagging, the reason you're getting this curve problem is not the consumer. Interest rates, I think, have played a part, but I actually believe it's the agents haven't caught up with their training and their mindsets of how to deal with the market they're in. Now, maybe that's a leadership thing. Maybe that's you've got people that aren't being given any training at all, or maybe aren't capable of being coached. But I genuinely believe the ups and downs that we're seeing, apart from the obvious bank holiday weekends that disrupt numbers and always have done around every Easter, you get some volatile numbers come in, whether you're in a boom market or not. These lines will start to even out and go upwards as the estate agency industry, and I mean by that the leaders and suppliers, get together to create an understanding of how to tackle the problem, because those that do will inherit huge amounts of market share.
Wise words as ever. Let's go on to price changes. 21,000 properties price changed. 20. Thoughts on this one?
I mean, obviously, I think it should be much higher. I know it's a bigger number than the previous years when we were in these bizarre.
It's the biggest number all year. The average is 17,800.
I still think it should be bigger, because if you're only selling 50% of your stock, then for me the number should be going higher, or you should be valuing better in the first place, either or. And until we're at sort of 70-75% of stock selling, because you've got to allow for 20-25% of people to change their mind, then we are not, as an industry, getting the prices or the marketing strategy right, one or t'other, probably both. In which instance you need to rectify it. You need to get it sorted.
Interestingly, gross sales this week stand alone we're selling gross sales 70.57, but when you take the net sales as listings, it is down nearer 50%. Just to give you an idea, the net sales this week 20,500, but the number of gross listings 37. So you're absolutely right. We're only selling 1 in 2, or just over 1 in 2, which is not particularly good, is it? Do you not think? Not brilliant.
No, I don't think it's very good. I mean, the sort of 90s and 100%, even in some cases, I've seen 105% from agents during the COVID years, if that's what we want to call them. You've got to discount that. They're not the norm. They were freaks created by freak circumstances plus stamp duty and everything else. But if you are only selling 50% of your stock, ask yourself, would you instruct yourself? You have a 1 in 2 chance. People have pilloried people like Purple Bricks because of their sell-through rate. Well, it wasn't that bad.
It was actually one of the best.
It depends how you work the stats, but it's definitely, whichever way you cut it, it was greater than 50%. The industry needs to look at that. We need to stop bidding for instructions, stop using fee and price. Well, fee is down to the agent, I believe. That's their choice. I wouldn't be a low fee agent at the moment because transactional volumes don't support that, but that would be my business model. But I definitely wouldn't be wanting to stockpile instructions to market them. I'd be wanting to list properties to sell them. I'd much rather be dealing with market share right now is not king. Share of the selling market is king. The people that are actually going to transact.
Well, it's interesting. When we get to the last part of the show, we're going to be focusing on Watford, and we're going to be comparing the different agents and how many houses they actually sell out, which I think is a fantastic stat. Let's move on. The average price of a property being reduced is £406,000. The average for the year has been 402. Remembering that the average price of a property coming on the market is 445. So that shows that the lower price properties are being reduced, not the higher price properties. Thoughts on that?
Well, again, I think it's a lack of either confidence, training, substance, that people, when they visit a property of higher value and therefore may make the assessment that the person in it is living on a higher plane to them, they become very subservient and submissive. In reality, that person deserves and should get exactly the same expertise and advice. You know, I don't believe it's that the people in the bigger houses are stubborn and won't reduce their price. I believe it's that the people in the bigger houses are being told the wrong price at the first place, and then that's not being rectified through weakness of structure, systems, processes, and just or bravery to say, I've got it wrong. Again, when the client is in a bigger property.
Great insight. Again, like gross sales, where this week we sold 26,341, which is the best since September last year. The average this year has been 21,888. We had a dip down in Easter when she went to 20 and 19. We had 2 weeks of uplift at 20.4, 24,900, 26,200. We dipped down last 2 weeks, 22 and 20, and we're back up to 26. Again, it's a roller coaster, isn't it?
It is, but it's a little bit of it's a bit of a misleading, in my opinion, a slightly misleading statistic, because 26,000 might be the biggest number since, you know, whatever date you mentioned, but it, as a percentage of what is available to be sold, the commission on offer, it probably doesn't fare quite so well. So it's great to see the transactional volumes, but we've got a lot of estate agents having to list, show, market, spend money, bringing lots of properties to the market. The sales numbers are solid, but there's a lot of wastage in our profit lines because we're spending and marketing on properties that we eventually never get to sell. So I don't necessarily want to champion the number of units that are selling. What I want to do is champion the percentage of what you list that you sell, and that is challenged. I think it's great that you've got 76% there over a
76 is the long-term 7-year average, not just for week 20, but for everything. This week we're at 70.5, which is, as I said, good. Compared to, I mean, we're running at the 60s and 70s in 17, 18 and 19. Obviously 20 was just coming out of lockdown. But again, there's your 97. Where do you think the gross sales should be? Should be over mid-70s, shouldn't it? Like the 76%.
Yeah, I mean, I think if you're at 70%, 75%, you're doing very well. If you're at 80%, you're world class. But if you're below that, you're not fit for purpose. So you have to rectify that problem. You can't. Would you put on your billboard, we give you a 1 in 2 chance of selling your property? No, you wouldn't. So if you're not proud of that and you are delivering that, solve that. You owe it to the industry. You owe it to your clients.
The average price of a property selling is 373,000. Let's just remember the average price of a property coming on the market is 445. So that's a 19% difference. But again, we touched on that earlier on. It just shows that lower price properties are selling, aren't they?
Well, or perversely, that the slightly bigger ones at the moment aren't. My understanding is the bigger ones are staying in the market. They're not going on and coming off. The reason they're not selling is because the price is wrong or the marketing is wrong. So there's still commission opportunities. There is still time for anybody watching your show, or you know, there is still time to earn the commission. And if you're an estate agent watching that commission stagnating with a competitor, there is still time for you to go and take that commission. Do one of those two things: take your competitor's commission that he's allowing to go stagnant, and make sure yours aren't stagnant.
Cumulative gross sales to date were in 437,700. Which, when you compare it with 17 at 429,000 and 18 or 19 hovering around 450, 460, it's not bad, is it? Could be better.
Yeah, the net picture I think would be a little worse. I think abortives this year, I know they've started to fall back down again, but I think they probably have been higher.
Okay, so on net sales, we are on 94% year to date compared to 17, 18, 19. We will get to that graph in a second. These are gross sales year to date. Again, the pink line is this year, 19 is red, orange dots. turquoise is 18 and yellow dots are 17. Again, it's just showing that classic roller coaster that we saw with the listings.
Yes. I mean, that's partly market. And again, I have to say, whenever I see it, my view would be, well, okay, what can I do to keep the pink line going up and flattening off? Because when I say flattening off, avoid the dips and the highs, because, you know, in any business, just a regular, nice upward curve. I can blame in the dips. You put your little cross on the dips. I as a leader, have a choice to blame.
Yeah, that's Easter. That's Easter, and that was the coronation.
Okay, so they may just be very simply, but even if you did it on a micro level, the performance of the UK estate agency market has been a little erratic. Forget bank holidays.
And let's remember, in 17, 18 or 19, there was the Easters, which is here, but there was no coronations here in 17, 18 or 19. So again, what you're saying is don't blame the market. You've just got to get out there, get the house on the market, get the bloody thing sold.
Well, I think you have to be respectful of the market. You have to understand the market, but you've got to fixate yourself on the solution, not the problem. I spend all my life with agents trying to fixate them on the solution, not why. If you're blaming something, someone, a set of circumstances, a government, a policy on interest rates, or a combination of things as to where your problem is, the one thing you're not doing is solving. And if you don't look to solve the problem, because the opportunity is that the vast majority of your competitors will be sleepwalking into excuses. Fine, let them. Of course, there are challenges. You know, we have had unprecedented, unusual set of circumstances. Two to mention are, you know, a very significant, consistent rise in interest rates from a very low base. We've not seen that before in my lifetime. You've then got COVID, but we haven't seen that in my lifetime either. You've got Brexit. All of these things are challenges. Every single one of them represent a solution. There is a solution for you to be better equipped, better trained, better mindset, better systems, processes, better customer service, better marketing, better visuals, better data to support the conversations that you have with landlords and sellers to attract them to your business. And then subsequently to attract buyers to want to buy. But it is about focusing on the solutions, because if you're fixated on the problems it'll be a self-fulfilling prophecy. They'll be real for you. They'll happen. They'll eat you alive.
How do agents both find the prop tech solutions to take the heavy lifting, and how do they change their mindset?
Well, I think it goes the other way around, Chris. I think suppliers are brilliant in the hands of well-intended, driven, well-trained estate agents. So the first thing you've got to do is get that bit right. You've got to get your people piece right. That's difficult, because in order to have good people, you've got to have good leaders. In order to have good leaders, they've got to understand where their weaknesses are and go and fix it. And those things are the domain of a very, very thin layer of top elite estate agents. You and I know we've done analysis off air and nothing to do with what's public, but the gap between the really good agents and normal agents is now massive in terms of market share and revenue being created. Whether you're looking at Companies House and pulling down accounts, or whether you're looking at hard stats of listing sales, listing lets, and all that sort of stuff, the gap is massive. Now, these agents still have the same challenges. The market represents the same hurdles. They're trading in the same circumstances. The difference is them, their outlook, their leadership, their systems, their processes. So it depends what you really want, because if you're going to focus on the solutions, you'll massively reap market share and profit rewards, in my opinion. No, but if you focus on the problem, or you deny that you can solve the problem, and you come from a negative mindset, then I think it's going to be a long few years for you. Lettings in particular could be very tough. It's about understanding the problem and then strategizing to overcome it, and then ruthlessly delivering that strategy.
Thank you for that, Iain. Move on to talk about net sales. So we're on 20,557, which has been the second best week. The average each week has been 16,694. But this week 20,557, which is the second best week in the whole of 2023. Cumulative net sales to date, we're on 338,422, which is 94% of the 17, 18 and 19 average. That did slip down to late 80s a couple of weeks ago when we had the Easter and coronation. She's come back up. At the rate we're going, we might catch up 17, 18 or 19 in the summer. The rate that is growing, it's growing by about 0.5%.
Yeah, the hardcore maths of this though is that if you've got a 6% drop in transactional values, which I think this is saying, or we will have as they wash through the system at the moment, most estate agents are seeing a 5 to 10% increase in costs because everything's going up in pricing, particularly wages. And the average UK estate agent makes 11% return on investment. You've now got estate agents making no money. So, 6% doesn't sound a lot, but it puts a hell of a hole in the P&L. If your costs have gone up and your income's come down and your pipeline isn't growing, so you can't see the cash flow returning to a good place, unless you've got a significant war chest, you have to change your strategy or sell your business.
Interestingly, in a couple of weeks' time, we're going to be doing a webinar, the pair of us, about buying and selling estate and letting agency. So do check that out on the ICG approved website. That'll be coming out next week. This is the number of net sales. This is gross sales each week, less fall throughs. And again, the yellow line, sorry, the pink line is this year. The 2020 was the yellow line. And the white line is 17 to 19. Interestingly, that we are at the moment, the way we're going is we're slightly above 17 to 19, the way we're going.
Yeah, I think the market is in a much more normal place. I genuinely believe that we had, coming out of 2008, 2009, 2010, as the market made its recovery at that point, the industry had a very strong employment, a very strong set of people working in it, and they'd become strong because of the adversity that had happened to them. My fear at the moment is I'm not seeing the same reaction. So I'm actually seeing people wanting to leave the industry. I think there was an article I read yesterday in property. I think it was yesterday in Property Industry Eye, about 40% of agents want to leave the industry. Of course, we're returning to normality, but if you want to take your fair share or bigger of whatever normal pie is, you are going to have to do the job better with better people, better suppliers, better technology, better culture, better systems and processes, because you're going to have to pay these people more money, and you're going to have to pay your suppliers more money because their costs are going up. They're not going to run at a loss to serve you guys.
Again, great truth from there. We're not going to spend too long on these because we've already spent time, but gross sales as a percentage of listings at 70. Iain says 70 is minimum. You need to be nearer 80, which to be good. Fall throughs as a percentage of sales, where the 7-year running average is 24.2, which again is the for every sale that, so for get your words out, Watkin. 24.28 is the percentage of sales that fall through each week, compared to your gross sales. This week 21.9. Obviously 2020 was an exceptional year, but it just shows that, again, there's nothing much to say on that one apart from it's not bad at all. Price changes as a percentage of listings shows that you're working your stock. Should we move on? Again, this is more for the data geeks.
Well, just on the working of your stock, guys, that is a constant thing. You've got to start to adjust your valuation piece. You've got to make sure that your marketing is connecting to every single possible buyer that you can, so that you can then deliver strategy B to your client in the event strategy A fails. And strategy B will mean a rethink, certainly around price, certainly around how you're presenting it. And if you're going to change the price, you need to change it to the amount that's going to sell it, not the amount you think the vendor won't shout at you.
think, I don't know if it was you or someone said, if you're not afraid to ask for the price reduction, it's too low. It's not enough.
My line to my guys back in the Romans days was, if the number you're about to give your client doesn't bring a little bit of sick up into your throat, you're about to tell them a price that's too high.
Again, wise words there. Right, this is the national stats. We're not going to, and the region. We're going to go on to the regional stats for a couple of minutes. We're not going to spend too long on this one, simply because these are available to download on the YouTube link that in the description bar. You can click on that and you can download these. The magic thing is this: you've got the running average, which is a new addition, Ian, so people can see what the running average is. And week 20. Bottom line is, green is good, red is bad. Okay, we're not going to spend too long on these because people can download them. But East Midlands, lots of greens there. Fall through slightly higher, but nothing end of the world because the percentages 23, not bad at all. Inner London, lots of greens. Again, the fall throughs are slightly higher, but the percentages still not bad in the early 20s. We'll whiz through these. Again, greens all the way. I find it fascinating that all the regions go up and down at the same rates. If you look at the tone, there isn't like one area that's green and everyone else is red. So that's
all it's very systematic and similar, isn't it? The one thing that all these charts show you, though, is that yes, we've got a bit of uncertainty. Yes, there's been a lot happening to the market, but we probably don't know what's going to happen over the next 6 months to a year. It'd be very difficult to predict that with any major certainty. What we do know is, categorically, is that the doom mongers were wrong. We categorically know the doom mongers were wrong. And by the doom mongers, I'm talking about the headline grabbers, the idiots that were predicting 30, 40% collapse in transactional volumes, the people that were predicting 30 to 50% reduction in house prices, the people that were talking about interest rates would be 10% by the year 2024, the guys that really weren't interested in feeding good information into buyers and sellers. They pretended they were. Some of them pretended to be the bastion of, but what they wanted was that shock and awe to create some form of audience for themselves. The simple fact is the UK market is incredibly robust. It should have collapsed. It's incredibly robust, and it will remain robust, and it will remain in a positive place. There are always going to be people that want to move. There are always going to be people that want to sell. There are going to be landlords that want to sell. There are going to be people that want to get into the investment space. There is a market for every estate agent. The estate agency now needs to understand the best strategies, the best mindsets, the best suppliers, and the best way to go and grab a disproportionately higher share of that market. And I suppose to understand what their charging model is going to be and be very clear about what the consumer is getting in return. Do those things, and you don't have to worry about the stats, really. There's someone else's problem.
Boys and girls, the regional stats are available to the ones that I whizzed through whilst Ian was giving his forsooths, are available to download on the YouTube in the description. You can download them, use them for your own personal use thing, not to be used on social media. Let's move on now and use the last part of the show, which is where we go to a town or a city. And this week we're going to Watford, Ian. I don't know if you've ever been there yourself, mate.
I've been there. I've had clients there. I have clients there. So yes, I know Watford. It's I mean, obviously it's sort of North London technically in terms of where it physically sits, just sort of north of the M25. But it is a big place, and it is a quintessentially middle market with quite a contrast of properties. So it's probably a very good, I mean, apart from the fact it's huge, it is a very good example of many regional markets around the UK in terms of the housing stock.
Right. Okay. So we're kicking off with a couple of graphs from Bricks and Logic, who produce great stats and then put them into graphics, which shows that you're a fantastic estate agent. You know what you're talking about. So this is the price changes of what's been happening. And if you zoom into Watford, again, this might be of interest to people in Watford. You can see how the different areas work. Again, neither of you and I come from Watford, so this might not be of interest, but it will be of interest to people in Watford.
Just to explain to me what the colour graphs are doing there. I can see the legend at the top. It says -1.5 if you're going blue.
This is not completion and land registry. This is sale agreed now versus 12 months ago. So this area here, that they're down 1.5%.
Yeah. Okay. Got you.
Okay. And then you've got Rickmansworth, which is really posh, which they're up 2%. Okay.
Yeah.
And you can
Yeah.
zoom in and out. You can go down to street level. Look at that. Fantastic. So again, something that you might want to consider. Again, not being paid by these guys, but just love the software. And then this is what's been happening to rent. So that this is London. You can quite clearly see that rent much higher in East London, in Romford, have been going up. And then you can zoom in, and it just shows you what's been happening to rents in an area basis. Okay, that these
no blue on that graph then.
There's no blue on that graph, mate. But again, it's interesting if you zoom out and look at the rental change over 3 months, completely different. Look at that. So at the north of the England, rents are from compared to 3 months ago. If you compare it to 12 months ago, they're obviously much higher. But if you're comparing it to 3 months ago, they're much lower. And again, you can zoom in and see what's happening to rents. Again, the scale changes is dynamic, although you can fix that. But I just love this bit of kit. It just shows you that you can use this as an estate agent, just to show you know what you're talking about and show you stuff. I use this a lot with my clients, and it works really well. But anyway, just before we kick off, this is a new website through the Office of National Statistics, and you can actually put in where the different areas of Watford are. And this is showing you dark blue is the private rented sector, and green is other, which will be homeownered. So it just shows you where the hotspots are for renting. I just wanted to show you this, Ian, that this kit out there that shows you where the hotspots are. But should we dive in and look at the stats, mate? Okay, so we use the stats from the Insight 20 EA platform. This platform is available for estate agents to use on their own town. I have access to the national one. You can buy access to this to your town. It's not a lot of money. I'm not being paid to promote it or anything like that. I'm just a huge fanboy of it, and it just shows you can have all what I'm about to show you. You can do on your own town. But I must stress to you, it's called the Insights platform. If there's any queries on the data, go and speak with 20EA. And do not mention my name if you're interested in it, because I'm not being paid commission for it. Okay, let's kick on and go and have a look at Watford. So we're using, for the purposes of Watford, we're using W17, 18, 19, 24 and 25. And we're first up is that we're looking at there's been 7,333 properties that have come on the market since the 1st of Jan. And immediately let's have a quick look at Image, or was that Imagine? So I do apologize. And their market share seems to have been drifting down, doesn't it, Ian? You can see there. Just shout up if you see anything that you like that you want to talk about.
Well, again, you've got to be very careful with market shares at the moment. This is of listings, yeah?
Yes.
Yeah, because many agents are now the good at, and Imagine are a very good estate agent. Make no mistake, they are a top company. Yeah. But I don't know what their strategy is personally. We only deal with their recruitment. We deal with some of their recruitment. They are many agents now are not focusing on the volume of instructions they take. They do not want to collect properties to market. They are becoming more and more used to saying, no, thank you, my fee is this, I will not market at that price. Now, they might use a softer bedside manner than I've just described. So some agents are strategizing to reduce their market share of listings, but to increase their revenue share or their completion share, or both of those latter two things. So you've got to be a little bit careful, because certainly a number of my clients are we are going through to clients saying you either reduce or you take it off, or you rent it. They're not doing nothing. I'm going to say, reduce it to this number, or you've got to rent it, because we're killing it stale and we don't want to be part of that journey. That's not what you've employed us to do. Now, of course, that produces some good reductions, which create sales. It does produce some disinstructions, and it will affect listings market, current stock market share. I don't know about Imagine, but they will not be losing market share because of anything they're doing. It could be a competitor has got better. It could be many reasons. I suspect it's because they're being bright enough to clear out their stock. And just now, temporarily, for a short period of time, market share probably isn't the number one thing being discussed in their boardroom. It's about getting sales done, invoices raised, profit in the till.
Good stuff. Right. Okay. I was trying to click on the other town just to see if they would come up, and for some reason she's not playing up. So I'm going to have to move on and look at this particular, which basically shows you how efficient the estate agents are in actually selling the stock that they put on the market. Okay.
So, yes,
go on.
Well, it just surprises me that Connells are at 66%. I would not have expected to see a corporate.
No, that's price changes. That's price changes.
Okay, where's this?
So we're looking at exchange versus withdrawal. Now, Ian, as you know, I do. The problem with this is that it's not the prettiest thing to actually look. So I've put the top 10 estate agents into a graph. How about that? Is that good or what? Can you see the graph, the Excel spreadsheet?
Yeah, I can see the graph. Yeah, so in effect, the corporates sell a lot smaller percentage of what they list.
So what basically left to right, imagine when it says here, first for listings, and the 10th for listings in the last 12 months has been Warren Anthony. And then what then the 20 EA platform does is that in the last year, it then looks at, right, a property's left your agency, she's either exchanged or withdrawn. So imagine 56.6% of the houses that they've put onto the market have exchanged, whilst 43.4% have withdrawn. Connells,
we don't know what's in their pipeline, of course.
We don't know what's in their pipeline, but this is basically past history. Connells are at 49%, Clayton's 74%. So I mean, if I was Clayton's and Fairfield, then you've got, probably have 25%, if you would have to work it out, because it isn't just a case of taking one off against the other, it's proportionality. Fairfield and Clayton's have a greater chance of selling a house than the likes of Connells and Imagine and Gibbs Gillespie. Brown and Mary at 39, that's quite low. That's not a criticism, just it is a simple fact. But that just shows you the power. And again, I think, boys and girls, if you're an estate agent and you are trying to prove that you're worth, one of the ways that you can prove your worth is surely to show that you can actually sell houses. Do you not think?
Yeah, but it's a stat that most agents don't show, or if they do, they manipulate a funny little graph on Rightmove to create whatever it is they want to create. But
yeah, I mean, again, all I've done there is just taken the exchanged and withdrawn, ignoring the market share. But again, the power of this software enables you to go to a punter and say, look, Mr. and Mrs. Miggins, you've got a greater chance of selling the house with me. And again, as Brian Mansell said last week, our job is to sell the house and get them moved, not to market it. Interesting.
Yeah, I think, we are moving, the good agents are now moving away from just collecting stock. Market share is the rightful king in certain markets. Now it's nothing. A share of the listings market share is, as long as it doesn't slip, ridiculously, you're much better off taking on fewer properties and selling a much higher percentage of what you list, because eventually that'll bring you the instructions anyway. So
again, let's just have a quick look. The average in the postcodes, 51.2% of houses will exchange, whilst 48.7% will withdraw. Now, that's not to say that it won't go on another agent.
Just keep talking, Chris, because rather embarrassingly, my battery's about to go. So 2 seconds. You keep talking. I will be able to hear you. And I'm going to...
let's just have a look at the price changes, and you can quite clearly see that Connells are the #1 price changer at 66. So they will reduce the price in 2/3 of their listings. Running average is 41. It obviously shows Imagine that I'm working their stock. Clayton's are at 48, Profits at 43, Gibbs Gillespie at 45, Brown and Merry at 34. But then let's just remember, with Brown and Merry, they only exchange on 39. So again, if you were Brown and Merry, that might be one of the reasons why you're not getting the properties sold and more ultimately completed, because your negs are not working the stock. Not a criticism, just looking at the stats. Interestingly, we have a quick look at Brown and Merry seem to be growing their market, as do Warren. Imagine have dropped their market share by 21%, and Purple Bricks at 49%. Again, that's endemic of nationally their figures. Profit and Holt just slightly off, and Gibbs off at 13%. Online estate agents in Watford have 5.4% of the market, which is very similar to the national stats. Again, as you tend to go north, there's a greater propensity of properties that go on with online agents. Let's move on and look at this. Now, this is, those of you who watch the show, basically what happens is 20EA will look at every one of your listings, compare it to what you thinks it's worth using an automated valuation model, or like a Valpal figure. Then they will compare you what you put it on the market for, and then they will compare what you actually sell it for. Okay. In a nutshell, they then average all that out and say, right, if every estate agent put on the same house, the same 500 grand house, what would they achieve for it? And Imagine would sell it for 496, Connell's 500,800, Clayton's at 504, 200, Profit and Holt 517. That's quite impressive, actually. Nice one, Profit and Holt. Nice one there. Gibbs Gillespie at 493. That's last week we were at a town where the stats were really tight. There's quite a wide band there, and it just shows that it quite shows here that Clayton's are probably just, I mean, again, I don't know this, but it just shows that Clayton's are putting their they overvaluing or just being optimistic with the pricing there, and then what they're actually achieving over and above. So it can just shows you that good pricing, Profit and Holt 1.47, but then they get 1.91 over the asking price. Again, interesting stuff. Anything you want to say in here before we move on to the next graph, Ian?
No, the bit that surprises me is the gap between the biggest and the lowest number. I'd need to look at that stat a little bit in more detail to understand what it's actually telling me. But it's always interesting to look at numbers. But in some cases, you've got to just, you know, look at it. So, you know, is the message the one I think it is, or is there something a little bit more deeper in there? But there's some good companies in there. I mean, Profit and Holt are a well-run business. Been around for a long time, so they probably know their stuff. Clayton's are an independent. Don't know much about them, but clearly doing some stuff.
Again, if I was Profit and Holt, I'd be saying we get you more money. Now you've got to be careful with the way you market that. But I mean, again, what a lot of agents do is they take this software out on their iPads and show it to the punters. Let's move on and talk about how quick the agents sell their houses in Watford. And it shows that it looks like in terms of the agents that get the houses sold quickest, we have Imagine sell their houses quicker at 37 days. And as we move up, we've got some, you know, Day and King at 43, Clayton's at 48. Interestingly, Profit and Holt at 53. And then we've got the how long does your negs take to actually get the sale through to completion? And it just shows that Gibbs and Gillespie seem to have the best negotiators chasing. However, that could be because they delay until survey's done. So I think ultimately it really comes down to new instruction through to completion, and we'll just do that. And Dane King up top with Imagine. So Imagine are the quickest. Profit and Holt at 205 days. Connell's at 217 days.
Be really interesting how consumers would change their choice of estate agent if they had access to this data in a format that made sense without the estate agent's interpretation of it. Because you know, obviously, clearly the chances of selling, the speed with which I sell, and the percentage of my asking price that I get are going to be three big factors way before you get to fee. So it would be interesting to see if one of these data companies decided to go B2C and allow the consumer to see this stuff.
Interesting. Or estate agents actually adopted it and used it in their marketing. This is lettings. This is the last thing before we finish off, Ian. Now, the issue with lettings is that not all agents in the last 12, 18 months have been putting their properties on. So we do have to take this slightly with a pinch of salt. But it obviously shows that you've got Open Rent, which is the biggest agent by far, because obviously they deal with private rentals. We put them on through Rightmove. Imagine, again, quite nice to see, biggest estate agent, biggest letting agent. That's quite rare. In terms of growth, Belvoir seem to be growing, which is nice. Connell's growing. Your Move and Marshall Vizard seem to be dropping, but again, that might not nothing to do with their stock. That might be just the properties that are putting on the market. Don't think there's much more to say on this one because we have to almost let the market settle down to a normal rental market. So anything on this before we go back to you, Ian, for your final conclusions?
No, I think the rental market is a subsection. I think it's a very complex place right now, and therefore it can't be talked about in a millisecond. It needs deeper thought.
Again, because the stats are a bit over the place, I just thought I'd leave that one just to watch, see the boys and girls in what we could see that. Right, final thoughts before we wrap up. Couple of minutes, go for it.
I think my final thoughts in terms of advice to estate agents is to take understand what you need to take out of the market to have the business that you want, and then strategize to go and get it. Don't worry about the challenges. Find the solutions to the challenges. There are a disproportionate number of things that could weigh you down negatively at the moment. You could be Brexit, it could be interest rates, it could be recession, it could be. But there is a huge opportunity, because whenever there is a change in market conditions, the opportunity to take market share and profit is at its biggest, because the people you are competing with are like rabbits in headlights as a rule. Stop looking at the headlight, focus on the path ahead, find your strategy, get the right guidance, the right advice, and you can be in a very, very good place. If you're going to work and you fear it, if you're going to work and you're not enjoying it, you're going to work and you're wondering why you're doing it, get out, sell your business, or find an employer that's got more enlightened, if you happen to be an employee rather than an employer.
Iain, thank you for that insight. More importantly, thank you for watching the show. Thank you for your continued support. Your messages are very, very pleasing to receive. If you've got any areas that you want me to look at in terms of towns, then send me a message. A couple of people messaged me last week. I've sent them I've sent them a message back through YouTube, so do check that out. A couple of people have asked for the same areas, one which I can't do, and one if they want more details, read the message, please. I hope you enjoy it, and we'll see you next week for week 21, where we are joined by Richard Durrant, who's big in the game at the Relocation Agent Network. He's going to give us thoughts on week 21 of the market. Iain, thanks again, mate, for your time.
Thank you.
Leave you in peace, and we'll see you next week, everyone.
Yeah, good luck, everybody. Cheers. Bye now. Bye.